All right, hey guys, CPI results just came out today. Um, Came in hotter than expected, right? You can see that our actual came out for year on year for CPI was actually 3.8%, as compared to the forecast of 3.7. Core CPI also did price in higher a little bit. CPI month on month, it's kind of been stable. So the risk sentiment right now is quite mixed. Um, Mixed in a sense of the fact that there are certain indicators that show that we're risk off, but at the same time as well, there are other indicators that show that there's some risk on possibilities as well. But that could also be based on certain variables, right, which we'll get into in terms of the context of why. But I think overall, I would say slight mix to risk off for sure. Definitely pre-market. There was just not much of a gauge on the market, but when New York session kind of came in, we can start to see a little bit more obvious indicators. So I'm going to kind of go over that real quick. So firstly, what we can see is that the TXY, the dollar index actually did price in a little bit higher. We can see that the 2-year yield is actually elevated. Um, we're getting a little bit of a pullback here on the DXY, but I do feel that it would probably head higher, but we'll see. But at least for now, we're still up on the day, 0.46% on the dollar index. Now, interestingly enough, the Nasdaq is actually selling off, right? So the results came out around somewhere around here, and what we can see is that there was really not much activity, and then immediately we got sold off, right? So that's already a very strong sign here. I want to say quite a big drop here actually, about 1.65%, 1.64%. Yeah, we're down in the day as well. So that's something to take note, right? So we got yields DXY up, we got Nasdaq actually going down. And something interesting as well is there might be a good setup for a short on gold. It's just a little bit risky because obviously anything can happen, but I think compared to before these results that actually came out, I would say that it's a little bit more clearer now as to where the direction of the market is, where the capital flows are going to, as compared to when, I mean, the whole market was basically just trading based on headlines. So I would say, yeah, overall mixed, right? Because I mean that's risk off, but then if we look at, so I'm in a trade right now on AUDCHF, and it's actually doing pretty good. I also did hedge a little bit on shorting AUDJPY to kind of hedge the move before CPI, but I may cut out of my short on AUDJPY soon, and then kind of let my AUDCHF play out, trade play out, and so. Yeah, AD is obviously a risk asset, right? And it's showing a little bit of strength, to be honest with you, showing that there's actually some capital flows here. But something to take note as well, which is what I want to talk about, is the context is, obviously AD has a high interest rate. The whole point of this was really just the interest rate differential play. And AUD has a 4.35% interest rate as compared to the Swiss franc. But yeah, Swiss franc is a safe haven asset. It holds its value quite well, even though it has a low interest rate. But the fact that we're not really seeing the bid on CHF, right, does kind of tell me that there might be some neutrality to it. Maybe markets are kind of looking at other sort of assets where they can really just maximize the yield or the risk premium, and they're trying to find other high odd macro divergence plays as well. So that's kind of the idea that we're seeing right now. I did write a note to our team today. Yeah, so basically, as I said, it seems like the CPI result has now been fully priced in into the market as compared to the pre-market reaction. NQ is pushing lower quite strongly, in my opinion, with DXY and yields also holding firm. It does look like we may be seeing a slight risk-off tone right now. I say slightly because the broader risk picture is still mixed. Some risk-sensitive assets are not clearly weakening. AUD, for example, is still strong, while CHF, which is normally treated as a safe haven, remains weak against it, but also due to the interest rate differentials between them, which was my initial gameplay. Even my AUDJPY short hedge is not really moving much, which adds to the idea that this is not a clean risk-off environment yet. So overall, I still see conditions mixed. However, if NQ can find a solid rebound, which is kind of what I'm actually hoping for, and push higher, I would feel a little bit more confident on my current long on AUDCHF, because obviously if there's a lot more signs of risk on sentiments, then definitely a lot of the other risk on assets will follow, and there will be a lot more liquidity, a lot more volume, and you'll be able to see it very clearly. So yeah, I may start looking for short opportunities on gold futures or XAU USD. After the CPI print, the move feels a lot clearer. It looks like capital is rotating more towards bonds, where investors can capture a strong risk premium and attractive yields. That makes the gold short thesis more reasonable to me. Gold is a non-yielding asset, so in an elevated interest rate environment, it can become less attractive relative to bonds and other yield-bearing assets. Uh, Yes, gold is often viewed as an inflation hedge, but that relationship tends to matter more over a long-term horizon. In the short term, gold is usually more sensitive to real yields, dollar strength, positioning, and risk sentiment. So for now, if yields continue to hold firm and flows keep favoring bonds, I think GC shorts makes sense as long as price action confirms it. So yeah, still a risky short, obviously, but like I said, I would like to see some confirmation here. So let me just take away my other chart here. All right, so what I really want to see here on gold, so this is the 4-hour chart, and what I would like to see is this low convincingly gold. That's what I would like to see. We did see a little bit of a nice break here, but what it really did was just a wick rather than a full break of this low right here. So I would like to see a stronger reaction, ideally close below, and then I'll look for pullbacks to get short into. That's the gameplay on gold right now. So this is really just based on really the divergence between the DXY and XAU. There's just, I mean, in gold, there's just clearly more bearish focus right now for gold and a lot more bullish strength on the DXY. I would say crude oil is also doing relatively is being relatively strong as well. So yeah, we'll see what's going on. I think, like I said, inflation is still a really huge problem. There doesn't seem to be any positive developments. I mean, Wednesday's meeting with Trump and China and the summit is going to be very, very important to take a look at and you know be aware of the headlines, because that's going to really it's going to be a very pivotal moment for the Iran and US war, and that can affect everything else that I just mentioned here as well, right? But if, let's say, there's no intervention, talks are not really developing progressively, and we actually see kind of the same thing, if not worse, then we might actually see yields really skyrocket and we might see gold really fall. Okay, so I hope that makes sense, guys. So that's the gameplay for now, but I'm gonna stay into my long on AUDCHF. I'm not in a neutral hedge position. I'm basically let's say I'm risking 1% here. I'm risking this short on this hedge here about 30% off that risk percentage. So if I'm risking $1,000, I'm actually just risking about $300 here. So it's not really a full neutral thing, but it's just kind of a way to hedge against, just kind of reducing some of the losses if there is any. But as of now, there really is not much at all. And the losses here are so minuscule, it doesn't really matter. So, but yeah, as you can see, AUDJPY, it is still kind of, to be honest with you, this doesn't look bearish to me whatsoever. It definitely does look weak in terms of volatility, and I mean in terms of volume, but this does not look weak. This doesn't look weak at all, in my opinion. Yeah, so AUDCHF really, really nice. Beautiful, beautiful chart right now. I definitely feel like for the longest time we've just been kind of staying within this range, and we can finally see something, right? We can finally see a little bit more volume come into the market. So we'll see what happens with AUDCHF. I'll definitely update it and on my channel. And yeah, all right, take care.